Back with markets at lunch and ET now.
Let's look at Asian markets. Asian markets are trading at a 4-week low on trading hopes that US Federal Reserve Ben Bernanke will come out with something significant at tonight's Jackson Hole meeting, even though the consensus on the street is that a QE3 is not expected, but knowing Fed, you never know.
Well, European markets as well have been trading muted ahead of the much-awaited and anticipated speech by the Fed Reserve Chairman Ben Bernanke.
US futures, and if you look at the kind of indications we are getting from US futures are also not indicating anything special. Dow futures are up only 26 points, Nasdaq futures are not going anywhere. In terms of data to monitor, you've got the Chicago PMI index, consumer sentiment, and the factory order along with farm price index, and the big event but of course is Bernanke's speech at the Jackson Hole.
Okay, let's get in further perspective then. Angus Campbell, Head of Market Analysis and Communications at London Capital Group, joins in on the show. Angus, mixed trend coming in. While you've got the Dow futures, which are just about muted, Europe has actually perked up on air and Asia has been trading weak. What's the consensus leading to? Whether or not we are going to see a QE3 tonight?
Well, consensus really is that we're going to see probably a repetition of what Ben Bernanke has been saying at various policy meetings over the past couple of months. Obviously, they are going to remain vigilant and will act if the economic conditions require. At the moment, obviously, the economic data has been very mixed. We had a good non-farm payroll number earlier this month. We had a revision upwards of GDP, but there's no doubt that the US economy is slowing. Inflation is coming down. So he will want to keep the option open, but there's not going to be any formal announcements of policy, of course, because he wouldn't do that outside his normal Federal Reserve meeting. But he may pave the way, perhaps, for something on the 13th of September when the Fed next meets. That's certainly what the market wants to hear. And because we've seen stocks grind lower over the past few days, it would seem that, investors are just positioning themselves for that possibility.
So Angus, ahead of the Jackson Hole meeting, how exactly would you characterize the global mood for equities? Nervous or wait and watch?
Well, I think certainly the last few days has showed that investors are nervous. There is really an appetite for further stimulus. The US economy is slowing. The Eurozone crisis is by no means over and remains completely unresolved. So there is certainly a degree of nervousness.
All right, Angus, appreciate your time and thank you for your thoughts. Let me now bring on board Jigar Shah, Senior Vice President and Head of Research with Kingman Securities. Jigar, good afternoon to you as well. Thank you for joining us. Jigar, even though the GDP number was above estimates, markets have not rewarded that data.
Yeah, clearly I think 5.5% is nothing to cheer about, and it means that second quarter, where we have some kind of headwinds in the monsoon and farm production, we will see probably some more pressure. Also, all is not well with the services sector growth that we saw. So clearly the pressure shifts to the second half, and if the 6.5, 6.7% kind of growth is to be achieved, a lot of policy decisions will have to work. Also, I think RBI will have to loosen. All these things will have to happen, and that puts a lot of things at stake. Therefore, I think market is not too pleased with our consensus GDP number.
What do you think is causing the weakness in the entire banking pack? I mean, given the slide that we've seen in the last few days.
Well, more and more news reports are emerging, that restructuring activities are much more, in pace than what we think or what the market thinks, and the market is discounting. So there is more pressure to come, although I think government banks have denied clearly that the NPA issue is exaggerated. And, also if you look at more and more, corporate evidence that is suggesting that, more corporate restructuring or the loan restructuring will be required. So I guess banking space is getting thrashed because of that, and also I think a low GDP growth rate means that even private banks, which have so far been holding on, they could see some tapering off on the loan growth, if not on asset quality, and therefore even private banks can see some kind of weakness in terms of valuation, which has so far remained quite strong for them.
Jigar, the fact that there is a huge NPA problem in the banking sector is well discovered and well documented. My question is that how much of that bad news is priced in?
Well, a lot of that bad news is priced in, but at the same time, what we have to see is that there is a challenge to them in terms of getting more capital, which is because of the regulation, as well as a lot of the banks are anyways approaching the capital deficiency. And the other aspect is that the problems which are known, the resolutions of those are not known, and I don't think too much progress is taking place on resolving issues in power or coal or aviation sector, and therefore unless that clarity is visible, that problems would prolong, and that's why I think the bank sector is a bit struggling now than earlier.
Jigar, are you a bit worried that Indian markets are getting too polarized? It's only FMCG and IT. Within FMCG, it's HUL, Nestle, and to a large extent ITC. Within IT, it's only the top two names which are moving.
Yeah, although I think one would like to be a little more positive and think that the market and the economy are near bottom. The street at large is not yet convinced about that, and therefore I think more or less everybody is overweight on the defensive. And I would include even software into that defensive and say that software, FMCG, pharma, these clearly are the only names that come to your mind if you want safety of your capital, some kind of growth in terms of dividend and cash flow, and also the best possible corporate governance that you can buy. And I think that's where the investor wants to be at this point of time in the market, and that's what the market is clearly reflecting. And I think for the next few months you will see this thing remain as it is until we see some kind of loosening of the monetary policy.
Jigar, give us some investment ideas wherein you are recommending your clients to buy into right now.
Well, certainly we are overweight on the IT sector going forward. We like some of the large cap names like HCL Technology. In mid caps we like CMC, Persistent, Infotech Enterprises. In private banks and financials, we like Federal Bank, we like Bajaj Finance, we like Mahindra Finance, and in the consumption segment, in the consumer discretionaries, we like Bajaj Auto, we like Mahindra and Mahindra, we like Tata Motors, and we also like in the consumer segment, we like Tata Global Beverages and United Spirits.
I was coming to United Spirits and I have read your report, good report, but what's the logic behind buying United Spirits? Are you confident that Mr. Vijay Mallya will restructure the company, or are you confident that he will either sell out to Diageo or maybe some other global player?
Yes, Nikunj, I think at this point of time, fundamentals of the alcohol business are not questionable, but the key issue is that whether the group financial crisis can be resolved, whether Kingfisher can be recapitalized. And one of the major ways to recapitalize that is sell the stake in United Spirits to a global major, bring money in United Breweries Holdings, and recapitalize. That is good, for the overall group health. And my sense is that that deal has to happen sooner than later. And more importantly, because of that issue today being an overhang, it does not reflect truly the value of United Spirits, which is far more than what it is quoting today. And once that event takes place, we feel very sure that the underlying value of United Spirits brands as well as White and McKay will come out, and that sets us into a lot more confident territory than before. And the market will also take notice of that. So that's why we are quite positive, and we still see that there is a lot of value in that company.
Right, Jigar, we've seen these false starts for United Spirits in the past as well. 2009, everyone was confident that Vijay Mallya will go and list White and McKay. Nothing happened after that. If it is Diageo this time around, 3 years ago it was Sab Miller.
No, I agree, but at the same time, you will have to also see that the situation is far more different than what it was probably in 2009. and I think there is very little choice with the UB group but to carry out some kind of a strategic sale. Secondly, if you see, they have now shown the world that earlier they were not so good with partnerships, but with the Heineken United Breweries partnership going quite strong, it bears testimony that these kind of deals can be structured, although it does take time and it doesn't happen in hurry, but it can be structured and managed well, and it can work as win-win partnerships. So I'm pretty confident that although it will take some time, but it will materialize this time and will unlock the kind of hidden value which is there.
Okay, Jigar, good chatting with you. Thanks as always for taking time out and joining in. Shift